Hello, welcome to European Open Briefing for Thursday, November the 8th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So we're seeing a continuation of that relief rally that started yesterday on the back of the midterm election results, which didn't produce any surprises. So there was big relief in financial markets. Possibly some were fearing some shocks that could have upset in particular the U.S. stock market. U.S. stock market yesterday surged by more than 2%, helping lift European and Asian indices higher, though this morning Chinese indices were the exception. They ended the day in negative territory. Having a look at the US dollar, it has rebounded back above the 96 level. Dollar yen also doing not too badly, climbing back towards that 1 month high that it touched at the start of Asian trading yesterday. Euro holding comfortably above the $1.14 level. The euro has mainly been benefiting on the back of a weaker dollar. Nothing new for the eurozone that would have justified the euro's gains, although in recent days some eurozone data has been a little bit on the positive side, giving a bit of support to the single currency. Having a look at sterling, it's marginally higher this morning at 1.3126. It's trading close to 3-week highs reached yesterday on the back of optimism that the Brexit deal will be reached very soon. Having a look at the risk-sensitive Australian dollar, it's also extending its gains this morning at 0.7285. So we did see better than expected trade numbers out of China earlier today that did boost the Aussie. The New Zealand dollar pairing some with strong gains, currently trading at 0.6780. We did have the RBNZ positive decision earlier today. They weren't quite as hawkish as some had been expecting following that very strong employment numbers out of New Zealand yesterday. The RBNZ Governor Adrian Orr even said that he's not ruling out a rate cut just yet, and the RBNZ also maintained their forecast of rates staying at current levels until 2020, so perhaps that's somewhat weighing on the Kiwi. If you have a look at commodities, WTI up by 1% today at $62.32 a barrel. There's support from talk of a possible output cut by OPEC and Russia. So OPEC and the Russian-led alliance will be having a meeting on November 11th, possibly to discuss a possible cut. But in the meantime, rising US inventories and US production is weighing on prices. Gold is lower today as we're seeing the US dollar bounce back. And having a look at the main performers, dollar yen, the best performer after oil prices. At the bottom of the table, we've got gold and then the loonie and the kiwi. Having a closer look at the dollar yen, it did seesaw quite a bit when those election results came up. So a brief spike to 1 month high of 113.81 before dipping to 112.92. It's now moving back towards those 1 month highs. So the market reaction wasn't, although the Democrats have taken control of the House, it's unlikely that they will reverse the tax cuts and the deregulation already enacted by Congress. And there's also hope that there could be some infrastructure spending. So overall, markets aren't in the view that the outcome of the midterms is going to be negative for the US economy. Plus, there's been positive talk, change of tone between the US and Chinese sides with regards to the trade war, and there's hopes that some progress can be made at the meeting between President Trump and President Xi at the G20 summit at the end of the month. So all of that is contributing to the improving risk appetite. A quick look at the pound now. We can see those strong gains for sterling since the end of October. Yesterday touched a 3-week high, 131.74. There was a report in Bloomberg suggesting that Prime Minister Theresa May has started briefing her senior ministers on a draft text of the almost complete withdrawal agreement, which reportedly is now 95% complete. So that has raised speculation that a deal is nearing, although there's still some issues to be worked out regarding the backstop for Northern Irish border. We're also going to have some data tomorrow out of the UK for the third quarter GDP. So sterling will be remaining in the spotlight for the rest of the week. And moving now to the Australian dollar, we can see it did reach a 6-week high of 0.7299 yesterday with the help of that relief rally following the US midterms. Today it was boosted by Chinese trade numbers. You saw Chinese exports surging by 15.6% in October. Forecasts were for just 11%. So it looks like there's still more front loading going on, even though we already had those tariffs come into effect for some time now. But we're going to see some of those tariffs rising to 25% at the start of 2019. So perhaps that front loading will continue until the end of the year. It's going to be more interesting to see what's going to happen to Chinese exports than in 2019. And looking at what's coming up later today, of course, all eyes will be on the FOMC decision at 19 hours GMT. That's it for me. Thank you very much for watching and have a great day.